What if I told you that one three-digit number can affect where you live, how much you pay for a car, whether you get approved for a loan, and even how much interest you pay? That number is called your credit score, and in the United States, it matters a lot. The problem is, many people hear the term credit score all the time, but they do not really understand what it means, how it works, or how to improve it. So in this video, I will explain credit score in the simplest way possible: what it is, why it matters, how it is calculated, and how you can improve it. Let's get into it. Problem. For many beginners in the USA, credit score feels confusing. You hear people say things like, "You need good credit," or "Your score is too low," or "Your interest rate depends on your credit score." But nobody really explains what that means in simple words, and that creates a big problem. Because if you do not understand credit, you can make mistakes without even knowing it. You might miss payments, use too much of your credit card, apply for too many loans, or think that having no debt means having great credit. But in reality, credit score is not about how rich you are, it's about how responsibly you manage borrowed money. What is a credit score? A credit score is a number that shows how trustworthy you are when it comes to borrowing money. In the United States, credit scores usually range from 300 to 850. The higher your score, the better. A high credit score tells lenders this person usually pays on time, uses credit carefully, and is less risky. A low credit score tells lenders this person may be risky to lend money to. That is why banks, lenders, credit card companies, and even some landlords look at your credit score before you are approved. Think of it like a financial report card. It doesn't show how much money you have, it shows how well you handle credit. Why credit score matters. Your credit score matters because it can affect many parts of your life. For example, if you want a credit card, your credit score can affect approval. If you want a car loan, your score can affect your interest rate. If you want a mortgage, your score becomes even more important. A better score can help you get lower interest rates, higher credit limits, better loan approvals, and sometimes even better rental opportunities. On the other hand, a low credit score can cost you a lot of money over time. For example, two people can borrow the same amount of money, but the person with the lower credit score can pay thousands more in interest. That is why understanding credit score is so important. Credit score ranges explained. Now let's make it simple. Credit score ranges usually look like this: 300 to 579, poor; 580 to 669, fair; 670 to 739, good; 740 to 799, very good; 800 to 850, excellent. So if your score is above 670, that's generally considered good. If your score is above 740, you are in a very strong position. And if your score is below 580, you may face difficulty getting approved for the best financial products. Do not panic if your score is low. Credit scores can improve over time if you build good habits. Now let's talk about how your credit score is actually calculated. There are 5 main factors. 1. Payment history. This is the most important factor. It answers one simple question: do you pay your bills on time? If you pay late, that can hurt your score. If you consistently pay on time, that helps your score. Even one missed payment can make a difference. So this is rule number 1. Always pay on time. 2. Credit utilization. This means how much of your available credit you are using. Let's say your credit card limit is $1,000. If you spend $900, you are using 90% of your credit. That is considered high. If you only use $200, you are using 20%. That is much better. Experts often suggest keeping your credit utilization below 30%. Lower is usually better. Using too much of your credit can make lenders think you are financially stressed. Length of credit history. This means how long you have been using credit. Older accounts help because they show a longer financial history. That is why closing your oldest credit card is not always a smart move. A longer credit history can help your score. New credit inquiries. Every time you apply for a new credit card or loan, a hard inquiry may appear on your credit report. Too many hard inquiries in a short time can lower your score. Why? Because it may look like you are urgently trying to borrow money. That can seem risky to lenders. So, avoid applying for too many credit products at once. Credit mix. This means the different types of credit you have used. For example, credit cards, auto loans, student loans, mortgages. Having a mix of credit types can help a little, but this is not something you should force. The most important things are still paying on time and keeping balances low. What is a good credit score for beginners? If you are just starting out, you may not have a score yet, and that's normal. In the USA, you usually need some credit history before a score can be generated. For beginners, getting into the good range should be the first goal. That means aiming for around 670 or higher over time. Do not try to become perfect overnight. Good credit is built slowly. It's more like a marathon than a sprint. How to build credit from scratch. If you are new to credit, here are some simple ways to start building it. Option 1, get a secured credit card. A secured credit card is one of the easiest ways to build credit. You usually pay a deposit first. Then you use the card like a normal credit card. If you use it responsibly and pay on time, it can help build your history. Option 2, become an authorized user. If a trusted family member has a credit card with good payment history, they may add you as an authorized user. That can sometimes help you build credit faster, but this only works well if the main account is managed responsibly. Option 3, make small purchases and pay in full. Use your credit card for small, regular purchases. For example, gas, groceries, a subscription. Then pay the balance in full each month. This shows responsible behavior without building unnecessary debt. How to improve your credit score. Now let's talk about how to improve it. Here are the most effective tips. Tip 1, pay every bill on time. This is the big one. Set reminders. Use autopay if needed. Never miss due dates. Tip 2, keep credit card balances low. Try not to use too much of your available credit. Below 30% is good. Below 10% is even better. Tip 3, do not apply for too many cards at once. Too many applications can hurt your score. Be selective. Only apply when necessary. Tip 4, keep old accounts open. If possible, do not close your oldest accounts. They can help the average age of your credit history. Tip 5, check your credit report. Sometimes credit reports contain errors, wrong late payments, incorrect balances, or accounts that don't belong to you. Checking your report can help you catch these problems early. Common credit score mistakes. Let's quickly cover some common mistakes. Mistake number 1, missing payments. Mistake number 2, maxing out credit cards. Mistake number 3, applying for too many cards. Mistake number 4, closing old accounts too quickly. Mistake number 5, ignoring your credit report. Avoiding these mistakes can make a big difference over time. Simple example. Let's say there are 2 people. Person A pays every bill on time, uses only 20% of their credit card limit, and keeps old accounts open. Person B misses payments, uses 90% of their card limit, and keeps applying for new credit cards. Over time, person A will likely build a much stronger credit score. That stronger score can lead to better approvals, lower rates, and more financial options. That's the power of understanding credit. Conclusion. So, Here's the simple version. A credit score is a number that shows how well you manage borrowed money. In the USA, it can affect loans, credit cards, interest rates, and even housing opportunities. If you want a better score, focus on the basics. Pay on time, keep balances low, avoid too many applications, and build credit patiently. You don't need to be rich to have a good credit score. You just need consistent, smart habits. CTA. If this video helped you understand credit score in a simple way, make sure to like this video and subscribe to the channel for more easy finance guides for beginners in the USA. And in the comments, tell me this: did you already know how credit score works, or did you learn something new today? Thanks for watching, and I'll see you in the next video.